This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, this is Mathis Connor with Connor Management Group, and this week we're going to look at the best growth stock to buy right now. Today is Monday, September 1st, 2014, and here on the opening slide we see that this company is in the chemicals major diversified industry, and we see this company with a 12-month upside potential of 27.9%. Going on to the next slide, we see that the name of this company is called FMC Corporation. Their ticker symbol is FMC, and the industry is chemicals, also called chemicals major diversified, and we see that up to their 12-month upside potential at 27.9%. On to the quick facts slide. FMC Corporation, a diversified chemical company, provides solutions, applications, and products for agricultural, industrial, environmental, and consumer markets. It operates in three segments: FMC Agricultural Solutions, FMC Health and Nutrition, and FMC Minerals. Their website is www.fmc.com. FMC is headquartered in Philadelphia, Pennsylvania. They were founded in 1884. They've been around a very long time. For those of you that haven't heard of them before, they're not a household name because they're a chemical company, but their products is used throughout tons of products that we ultimately use. The ticker symbol, once again, is FMC. The sector they operate in is basic materials, and within that, the industry is chemicals. The annual revenue for FMC over the last 12 months was $4.02 billion. The net income over the last 12 months was $439 million, and their cash from operations was $211 million. The market capitalization of FMC now stands at $8.81 billion. On to the products and services slide. It's pretty simple and straightforward. We have a photo of the FMC logo, and we have photos of, say, a cover slide from each of their three divisions. We have a photo showing the FMC Agricultural Solutions cover slide, and it's basically saying growing innovation. There's a picture of two people looking at some plants with a backdrop of fields of plants. Then there's the FMC Health and Nutrition. Their products is used in tons of different foods, lots of pharmaceuticals, a lot of personal care products like cosmetics and the like. And then there's finally the FMC Minerals division. They make a lot of alkali chemicals, as well as lithium, and that's the alkali chemicals used in the manufacture of different glass and glass type products, and lithium is used in the manufacture of a lot of batteries today. So that's what we have for the products and services slide. On to the metrics slide. Once again, we have the annual revenue for FMC over the last 12 months at $4.02 billion. The net income is at $439 million. And the cash from operations over the last 12 months was $211 million. The operating margins for FMC in 2013, they were 21.5%, and now in 2014, they're tracking at 23.5%, which is something good to always see, improvement in operating margins. And now on to the valuation metrics. The trailing PE ratio for FMC stands at 17.3. and the forward PE ratio stands at 11.3, and that's the relationship you'd like to see. That implies that analysts on average think that the earnings should be increasing. The PEG ratio for FMC is at 1.4. It's not too much greater than 1. The price to sales ratio is at 2.2. The price to books at 5.2. Maybe that's a little rich. The enterprise value to EBITDA stands at 12.3. Now, the recent closing price for FMC was $66.14. The 52-week low is at $64.05, and the 52-week high was $83.94. So the stock is much closer to its 52-week low than its high, $66 versus $64, that's for sure. The 20-day moving average stands at $65.51. The 50-day moving average is at $67.89, and the 200-day moving average is at $73.25. So that relationship tells you that there's been a modest pullback, with the 20-day moving average being the lowest of those three numbers. The average daily trading volume for FMC is 1.1 million shares per day. So, that's decent trading volume. The beta is at 1.3, so the stock is a little bit more volatile than the market, going up and down. When the market goes up, FMC tends to go up a little more. When the market goes down, it tends to go down a little more. The dividend yield for FMC is at 0.9%, and the average dividend payout ratio over the last 3 years is at 12.7%. On to the price chart for FMC. We have a photo of the price chart for the last 12 months, and over the last 12 months, the stock has declined negative 0.9%. So over 12 months, the stock is essentially has returned to where it started. But it started out around $65 about a year ago, and it peaked up to around $83 back around March of 2014. And from March of 2014, it has gradually declined now to the $66 range. And for the most part, going through the news of the company, overall, we view that the stock has pulled back primarily due to disappointments or just shortfalls in its agricultural division. We've heard throughout the year that a lot of companies have had some poor performance due to the severe winter storm this past year, and consequently not as many of FMC's agricultural products were used. So that's from what we can tell, the reason for the pullback. But overall, for the last 12 months, the stock has essentially been flat. But the earnings expectation are strong. FMC has been a pretty steady performer, and that's all we have for the price chart. And on the summary page, just to point out, the financial statement quality of FMC is excellent. I mean, the amount of debt they have for the next 5 years is $661 million, and their net income is around, say, ballpark $500 million. So they could technically pay off their debt in 2 years. So they have excellent financial statements. And as we mentioned earlier, their operating margin trend is improving, which is always good to see. The price pattern trend, which we just talked about, net over the past year, it's flat. And when it comes to the overall market, we're pretty neutral in the overall market. We don't see too many bullish signals or too many bearish signals, that's for sure. So we don't think FMC will face any headwinds one way or the other. And to wrap up, the recent closing price we see for FMC, the recent closing price was $66.14, and our 12-month price target for the company is at $84.63. So that gives FMC a 12-month appreciation potential of 27.9%. So it's for all these reasons that we think that the company, that we think that this is the best growth stock to buy right now. The company makes products that are historically in demand and will continue to be in demand. The stock has not appreciated on a net basis over the 12 months. So we think with improving operating margins, excellent financial statements, no net appreciation over the past 12 months while still continuing to earning cash, we think that this company will be under pressure to advance nicely over the next 12 months. And once again, that's why we believe FMC is the best growth stock to buy right now. Well, that's all we have for you this week, and we hope you found this presentation helpful, and we'll talk to you soon. Take care. Bye. Hi, this is Mathis Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate a thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why the stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So hey, that takes care of my educational background. Basically, bottom line is to see, I did a lot of schooling. What my career experience has been to date. I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down in the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager. And basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance. I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Content Management Group and the development of all these videos and podcasts you've been seeing and hearing. And, I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Content Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to CEOConnorMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares Content Management Group side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size was probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast about thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to CMG stockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward. and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.